Markets are often volatile, and hidden within that lies opportunities, but only if you know where and how to look. Hi everyone, I am Anchal, and in today's video, we are gonna be learning one of our PMS strategies, that is Super 30. We have with us Karan Arora, who handles product at Green Portfolio, to talk about this fund. Thank you, Karan, for joining us today.
Thanks, Anshul.
Can you walk us through the fund? What is the fund about? What is the fund strategy and fund philosophy?
Yeah, so Super 30 is one of our flagship funds. It is a high risk and high reward strategy where we are looking at investing in companies that are going through special situations, such as an ownership change or a turnaround in the company, or a merger and acquisition that has changed things around for the company.
Karan, this special events term, it might be difficult for our viewers to understand this. If you could break down this term, and also if you could give us an example, how do you capitalize on these events?
So special situation arises in a company when certain large changes happen. These changes could be anything from the change in management, right, of a defunct company to a very strong backing by a group, or even a technology transfer of an international company into a domestic company. It could even be debt reduction by change of ownership and capital infusion, which now places the company at a much healthier place.
So, Karan, the examples that you just gave, these type of news might not even come into the light, right? So, this brings me to a very important question. How do you as a company spot these kind of opportunities?
So, these kind of opportunities would not actually come in a screener of sorts, right? So, we are very different in our approach where we are not relying on the top-down approach that typical firms do. We are open to ideas from all sides, and what we are doing here is, like for example, the research team at Green Portfolio, which consists of CAs and CFAs, all of them experts in different sectors, are constantly monitoring different companies and smaller ideas, right? Our network also gives us access to management of different companies directly, so we're able to understand what is the new thing in each industry, in each sector that's going on. On top of that, what we also do is we are constantly monitoring these companies. We are conducting management meetings. We are conducting plant visits, which gives us an additional edge in terms of what knowledge we have available to us.
So, if I were to put it in a nutshell, you talk to the management and that helps you to gauge the vision of the management better, right?
Absolutely. I mean, focus on the management is prime for us because it really will be the defining factor, especially in smaller companies where you're not relying on professionally driven managements, right?
Okay.
How strong the promoter's vision and how aggressive they are, whilst ensuring that their capital allocation is healthy, is very important to us.
Okay.
So we'll be very heavily indexed on promoter quality.
Okay, so coming to your niche, are you small cap, mid cap, or large cap focused? And if you could give us the segregation, particularly for this fund.
So we are specifically small and mid cap as a fund house.
Okay.
And for this fund, which is the Super 30 fund, we are investing in the small and micro space. In fact, we are also giving some exposure to the SME space as well in the Super 30 fund.
Okay, so this space that you have talked about, small and micro cap space, it's very risky, right? Smaller the market capitalization of the company, higher the volatility. So how do you mitigate this risk?
That's actually a good question. So we are tackling this in two ways. One is on the research front. How the research process for us works is that we are, as we study the company, as we go through the material available on the company, as we go through the public con calls and everything, we develop a set of questions that we have for the company that we are looking to answer with our thesis. We're developing a thesis, we are looking to answer a lot of questions.
Okay.
If at any point during our research, be it through the publicly available material or through the management calls that we are trying to hold up or through a plant visit, if at any point in time our questions are left, specific questions which are material in nature are left unanswered, we will more likely than not be rejecting that stock. In fact, 97% or more than 97% of the stocks that come to the research table get rejected because of this. On the other side, we are tackling this through allocation. We are making sure that your funds are invested well diversified across 7 to 8 sectors at any point in time. Other than that, what we're also ensuring is that your investments are happening in tranches, multiple tranches, right? So we will take our sweet time, usually 2 to 3 months, to invest your initial capital, right? And even while exiting these investments, we will be exiting them in tranches and not in one go. What this ensures is, especially because the small and mid cap space comes with a higher volatility, we're able to mitigate that particular risk with this.
Okay. So, Karan, you have been working in this industry for the last 5 years now, and you would have come across various type of investors. Some might be too conservative, some might be too aggressive. So, what kind of investor would benefit from this strategy?
So I think if you're an investor who has a lot of time on their hands, if you're just starting out and you have, let's say, the next decade at your hands, and you have that time available to you just to invest in equities and aggressively, I think you should definitely have one set of aggressive allocation to this fund. Secondly, if you're someone who already has a large cap investments in place, who has a stable asset allocation in place, I think you should also look at having an aggressive set of portfolio in this fund.
Okay.
And thirdly, if you're anyone who has more than 3 years,
Okay.
You should definitely look at this fund.
Okay. So, Karan, if I were to invest in Super 30 fund, how do you ensure that my investments are safe with you?
That's a good question. We are actually not taking your money directly. I'll explain to you how the PMS structure actually works.
Okay.
So there are 3 parties involved in this. In India, there are 12 total SEBI registered custodians, and each PMS in the country is mandatorily required to appoint a custodian for their PMS, right?
Okay.
In our case, we are partnered up with 3 of them. One is called Orbis, second is ICICI, which is a household name, and third one is Novama. So whenever you open a PMS account, we open a few items. We obviously open the PMS account and onboard you to us. But at the same time, you get a custodian account, a demat account, and a broker account. In this example, when you give your initial capital to us, your money actually is kept with the custodian and not us. We're not allowed to keep your capital.
Okay.
Your money is kept with the custodian, and the broker is the one who's actually placing the trades based on our instructions on what to buy, what to sell, how much to buy, and how much to sell.
Okay.
So that's how the structure works.
So, Karan, there would be a lot of Indians who are not residing in India right now, and they might be looking for aggressive strategies like Super 30. So, are you as a fund open to international investments, and how does one do it?
Absolutely. We have a lot of international clients already, and you can invest through multiple routes. If you're an NRI, you have 2 routes available to you. There is the NRE route and there is the NRO route. If you have Indian money, you choose the NRO route. If you have money that you're looking to repatriate back, you choose the NRE route. If you are an FPI, you also have options available to invest in the PMS.
Okay. So, Karan, a lot of companies in India have something called exit load, and some even have lock-in periods. So, if I were your investor and if I were to exit the fund before, let's say, 3 years, will there be any restrictions that I'll be facing?
You'll be facing 0 restrictions. I've told that you should have an investment horizon of more than 3 years, but we are not locking in your investments. There is 0 lock-in. So Green Portfolio does not leave by any lock-ins, and Green Portfolio does not leave by any exit loads on your investments in the PMS, right? That's, I think, unique to us. We do not believe in applying these lock-ins and exit loads. But yes, we do think that you should have your time horizons in place and in clarity.
Okay. So, Karan, this helps a lot. You have answered almost all the questions. So, thank you for joining us today.
Thank you. And I really hope that this helps people who are looking to invest in this fund. Thanks.